Hello, Namaskar viewers. I am Sanjeev Pandya, welcoming you to this week's edition of the Tax Talk with Ajay right here on ITV Gold. The show is proudly brought to you by SAI CPA Services, a full-fledged professional complete accounting firm located in state of New Jersey with multiple locations, and they are known for their impeccable, the best services when it comes to your personal tax returns or corporate tax returns. From small business to mid-sized business to large businesses, they all go to SAI CPA Services because SAI CPA Services believes in doing taxes right. Refund, no refund, that's a one thing, but they do taxes right, and they make sure that if you're entitled to any and all deductions, they will make sure that you get all the deductions. So for your personal or corporate taxes, remember to contact SAI CPA Services at 908-380-6876 or visit their website saicpaservices.com. With that note, I'd like to welcome Mr. Ajay Kumar of SAI CPA Services to the show, sir. Good to have you.
Thank you, Sanjeevji. Thank you for the kind introduction.
Sure. 2 months have gone by, January and February in the tax season, and March and April, another month and a half to go. And this is the most critical time because, you know, people wait till the end, and that's when they come to you.
Absolutely. We do a lot of taxes during this time of the year.
Yes, all right. And of course, corporate taxes, you know, deadline March 15, and then personal taxes April 15. Speaking of the deadlines, Ajay, this is a question, I guess, common question among viewers, and they are always curious to know. Can we talk about the, you know, the tax returns and the deadlines, and can we give them basic information today's show?
Absolutely, absolutely. And it's apt time. Everybody is thinking about the tax deadline. A lot of people make mistake, especially the new business owner. They don't realize that for their business, the tax deadline is not April 15. And then they end up paying a lot of penalties, interest, just because they did not know what they did not know. So it's a very apt topic. We can talk about the tax deadlines for various type of companies, personal taxes and everything.
That's interesting. Viewers, you'll definitely find this interesting because tax filing and deadline is something that you should make a note of it. So let's start with business tax filing deadline for S corporation, partnerships, LLCs.
Absolutely. So at a high level, there are 5 different type of businesses, Sanjeevji. Proprietorship, we call it Schedule C company, single member LLC, when the LLC is owned by one person, 100%, or it could be multi-member LLC, where LLC is owned by more than one person. So if it's a single member LLC, one person owns the LLC, then the tax return are filed on Schedule C, along with the personal taxes. So you have to be careful when we say the LLC tax deadline is March 15th or April 15th. So single member LLC, one owner LLC files the taxes with personal taxes, and that deadline is April 15th. If you have husband, wife as an owner, or if you have 2 partners or more than one owner in the LLC, then the tax deadline is March 15th. So you have to be careful that how your LLC is registered, and you can look at the EIN document, SS4, it lists the form that you're supposed to file. So if your SS4 says 1065, that's what you're supposed to file. That means your LLC is registered as more than one owner LLC.
Okay, more than one member LLC.
More than one member
one
LLC.
Member LLC.
So if you have 100% ownership, then it's a single member LLC, and that's when it says Schedule C, i.e. April 15th, you file it with your personal taxes.
All right. So we talked about C corporation.
Absolutely. So let's
LLC and S corporation now.
Absolutely. So after the LLC, we can talk about the S corporation and C corporation. So it's confusing when we say what's the tax deadline for a corporation. Well, hold on. It depends on the type of corporation. For a S corporation, which is a flow-through entity, the tax deadline is March 15th. Guess what? For C corporation, the tax deadline is April 15th. Again, the same thing. For an LLC, single member LLC, April 15th. Multi-member LLC, March 15th. S corporation, S as in a small corporation, is March 15th. If it's C corporation, then it's April 15th.
Okay. Speaking of that, I have a question. S corporation, as you say, small corporation, perhaps stands for small corporation, right? What does C corporation stand for? Why do they name it C?
I'm not sure. C as in Charlie. Earlier, this is how I see it. S corporation is a newer structure. It always was C corporation, and the word C actually stands for corporation. or
Achha.
just because corporation was the only structure at one point of time.
Okay.
S was added later to create a hybrid structure that has the benefit of LLC and the protection of a corporation. So S corporation was not original structure, which was added later. So C originally stood for corporation.
Corporation, interesting. So now we all know LLC stands for Limited Liability Corporation.
Limited liability company.
Limited Liability Company. Okay, absolutely. So now we have S Corporation, C Corporation, LLC, and then proprietorship and everything else. Now, in what business standard the estimated tax payments are due?
I'm glad you asked. So estimated tax payments are due when your business is profitable, or in theory, when you expect to owe more than $1,000, that's when you are expected to make estimated tax payment. Especially when you have LLC, S Corp, or distribution, or capital gain. In those cases, you have income where the taxes were not paid. If you are drawing money from your retirement account and the taxes are not withheld, or enough taxes are not withheld, you may have a situation where you owe taxes. A lot of times when you have multiple W-2s, people who have multiple jobs, they end up owing money because each W-2 is a small amount. Let's say if you have one W-2 of $100,000, then the system knows to withhold 20% taxes. But when we have 5 W-2s, 20,000 each, then none of these W-2s will be withholding any taxes, because at $20,000 for a married filing joint type of situation, you're not supposed to be paying any taxes. But the second job doesn't know that you have multiple W-2s. So when you add these 5 W-2s, you typically end up owing money. So if you have a situation when you expect to owe more than $1,000, you need to have the estimated tax payments.
What if you don't pay?
Well, like anything else, if you don't make the estimated tax payment, IRS can charge you interest and IRS can charge you penalty. So depending on how much you owe, the penalty is not for late filing when it comes to the personal taxes. Penalty is for late payment. Let's say, for example, if you expect to owe $10,000 and you make that $10,000 payment in time, before time, and you don't file the taxes, then IRS will not have the right to charge you penalty. But if you don't make the estimated tax payment, then your penalty could be as much as 5% per month of the amount that you're expected to owe. It can never go more than 25%, but I mean, that could be a significant amount. I mean, if you owe $10,000, your penalty itself is $2,500, I mean, the maximum penalty. Then on top of the penalty, Sanjeevji, you can have interest over it. The interest varies. IRS changes this interest every quarter. It's around 8% now. But then you add 8% interest on top of the penalty. So by the time everything is added together, it's a good idea to consider making the estimated tax payment.
Okay, that's a good point. Now, as I always say, and we all know it also, that for corporate taxes they can contact SAI CPA services, because SAI CPA services is one of the most reputable CPA firms in the area, and they can help you out anywhere in the USA. So when a person, a business owner comes to you, a brand new business owner, start a business, and you do their taxes and everything else, then you advise them that this will be your estimated tax payments for the next year?
Absolutely. In most cases, a lot of these business owners, Sanjeevji, they do monthly financials. So at any point of time, they already know how much the profit is going to
Correct.
be. Based on the profit that they are expecting to collect, expecting to make in the whole year, the estimated tax payments are supposed to be made every quarter. So for 2024, we are supposed to make estimated tax payment, the first quarter's payment, by April 15th. Not at the end of the year.
I know.
Not when we file the taxes.
Okay.
During the year. So estimated tax deadlines are April 15th, June 15th, September 15th, and then January 15th. For any year, first quarter is due within 15 days after the quarter is ending, meaning April 15th. Second and third quarter is due actually before the quarter ends. And you can only make these estimated tax payments if you know how the business is going. And that's why it's important for a small business to track the financials, the P&L, profit and loss statement.
I got you, but then the CPA or the accountant or your firm, somebody, they will let them know that you need to pay $2,500, $3,000.
Absolutely.
Depends upon their P&L and what money how much money they're gonna make.
Absolutely.
But what if somebody pays more than possible, or somebody pays less than they owe?
Well, if somebody pays more than what they owed, they have the right to refund. They can get the refund with interest. They have an option to have this refund applied to the next year, next quarter. Or if they pay less, then of course they will owe some money at the end of the year. They may owe, depending on how less they paid, they may have some interest and some penalties as well.
So unknowingly, if they pay less, then they still would have to pay penalty.
Well, it depends on how much you miss it by.
Yeah.
So the estimated tax payment should be at least 90% of your total expected taxes, or 110% of the last year's taxes, whichever is higher. Meaning, just because you missed $1, they won't charge you penalty. So they have this range, 90% of this expected tax liability or 110% of the prior year's tax liability, whichever is higher. Meaning they have a formula, they have a system in place. If you miss by a certain amount, by a small amount, no big deal. Just pay us the amount. Thank you very much. If you miss by a large amount, then that's when the situation comes.
So that's why one hint we can give it to business owners is they should really go to CCPA, before the end of the year, just to make sure that, look, this is where I stand, this is what I have paid. Let me know what I need to pay extra, so that way they can save penalty and interest.
Absolutely.
Before we go into the break, quickly, we have 1 minute. Anything else you'd like to add in this discussion?
Absolutely. So you don't go to the CPA only towards the end of the year. There are situations when you overpaid and you still have penalty, and you wonder how so. Let's say you go to the CPA once a year in December. The CPA said you owe probably $100,000. I'm just giving you an example. And you paid $110,000 just to be on the safe side. Now you have a refund of $10,000, but this $100,000 you were supposed to pay 25, 25, 25, 25 in 4 quarterly installments. So in theory, you had the use of $75,000 from the government for the first 3 quarters. So you have to be doing it more often. You have to have especially if you own a business. If it's a personal tax, no, don't worry about it. Do what you need to do.
But in the business, you must make
the business comes with a lot of compliance. Business comes with a lot of obligations.
You can just put them together in the last payment.
Absolutely.
All right. With that note, we're going to take a break. When we come back, we're going to talk about personal taxes and deadlines, and the tax payments and interest and penalty applies to those personal taxpayers. That's coming up right after these messages.
Did you know how many personal taxes were filed last year? Guess what? 152 million personal taxes were filed, and out of 152 million, 85 million were filed through tax preparer, through paid tax preparer. So almost 56% of the volume goes to paid tax preparer out of 152 million taxes that were filed for the last year.
Okay, that's a Did You Know segment, right, in our show, weekly show, the Tax Talk. Now, I like to know that how many millions taxpayers got refund out of 152 million tax return filed.
That's a great question. More interesting than that is how many people could have received a refund, but they did not. IRS has billions of dollars in unclaimed fund. Meaning in IRS books, these taxpayers could expect the refund. But just because the taxpayer did not file the taxes, they did not get the refund.
How can they find out?
Well, you can call IRS. It's public information. 1-800-829-1040. IRS individual hotline. Call IRS. They're busy right now, but maybe after the tax season. You call IRS, give your social security number, name, address, verify the information, and then ask for a compliance test. See how many taxes I have filed, what I owed, what I can get refund, and IRS representatives are obligated to give you all the information. You can create a link on the IRS website. On irs.gov, you can create your own profile, your own login, password, and you can see all the prior year's taxes that you have filed and whatever you owed or the refund that you can expect.
All right, interesting. So number is 1-800-829-1040. That is the number, and irs.gov is the website. All right, in that phone number, 1040 stands for Form 1040, which is very widely used among the personal taxpayers. Person who is making, let's say, minimum $30,000-$40,000 a year to person making hundreds of millions of dollars a year, such as Elon Musk and Bill Gates and Warren Buffett and who's who. And of course, in that list, I like to add Mr. Ajay Kumar also. He also files 1040. So 1040 is the one for the personal taxpayers. Now let's talk about personal taxpayers deadlines and the related matters with it.
Absolutely. So the personal tax filing deadline is April 15th. I want to give you a caveat here. If you have properties in India, if you file taxes in India, just remember the tax filing deadline in India is June end, because India works with the fiscal year system, April 1st to March 31st type of system. So if you are supposed to report your Indian income, it will be a good idea for you to file an extension. So before April 15th, file an extension, so you have 6 months till October 15th to file your taxes. So you have enough time to get the Indian taxes, the tax deducted at source over there. You can claim the taxes paid on Indian income against the taxes that you owe in US. But you can only do so if you know how much is deducted, if you have the Indian tax return over there. In that case, if you are filing the extension, just remember the extension is for filing the taxes only. Extension is not for making the payment. In our first segment, we covered if you expect to owe more than $1,000, you need to pay that amount ASAP to IRS. So when you're filing the extension, try to put all the numbers together as best as you can, estimate the numbers that you don't have, so the Indian income, the foreign asset, whatever you need, and try to come up with an estimate amount. You make that estimated tax payment along with the extension filing. Now you have 6 months to prepare your taxes, and IRS wouldn't charge you any interest or penalty.
Interesting, good point, very good point. So all right, so that's about Form 1040, and of course, now 1040 is the federal form.
That's right.
And then whatever state you're living in, you also need to file state income tax return. Do they have the same deadline?
Well, not necessary.
No.
Most states do. Most states don't want to recreate the wheel, don't want to create a new system. So most states will follow the federal guidelines. There are situations when something happened, some natural disaster happened. In those cases, states will extend the deadline. IRS sometimes extend the deadline depending on if it's a bigger scale or a smaller scale. But in theory, at least, the state tax deadline doesn't have to be exactly the same as the federal tax deadline.
But in New Jersey, it's the same.
In New Jersey, it is.
Yeah.
The other thing you want to understand, we talked about 1040 form. In NJ, the form number is NJ 1040. Most states will have 1040 along with the state. Some states have different names. Say New York will have CT-3. But most states will have this form number state-1040, NJ-1040.
So everywhere is a 1040. You know how 1040 came in effect?
Please tell me.
Okay. 1040 came in effect is that, a government says, okay, back in centuries ago, right, that if you make $50, you make $50, you give 40 to government, 10 you keep it. That's how it came in 1040.
No, you are 100% right. You are 100% right. Kidding aside, and as much as we complain and whine about the higher tax rate, the tax rate that we have, highest tax rate that we have right now, is 37%.
Correct.
The minimum is 10%,
There you go.
maximum is 37%. Right now, the tax rate that we have are the lowest tax rate that this country has seen. The highest tax rate was as much as 87%.
Yes, I know, you told me. Yeah.
That's when the 1040 comes from. So I agree with your theory, 10 for you, 40 for us.
It's a fact theory. Having done hundreds of shows with SAI CPA services, I have learned a lot, and I use my knowledge, to remind you and everybody else. That's how it came in. But that's an interesting quiz. Anyway, so let's move on. All right. So April 15 for the federal and the state tax return, and that's your personal tax return. What if you miss a deadline? Is this the same thing as like you must file an extension? If you don't file an extension, then penalties and interest.
It's slightly different. So for LLC, and I'm talking about multi-member LLC here, or S Corp, flow through S Corp, the penalties are late filing penalties as well. If you have more than 2-member LLC, multi-member LLC, 2 or more member LLC, or if you have an S corporation, you have a penalty of $210 per month per partner, which can be as much as $5,000 for you. So you have large late filing penalty. For a personal tax return, there is no late filing penalty. So as long as the payments are made, sufficient payments are made, you wouldn't have a late filing penalty. That's why it's important, if you're extending your taxes, it's important for you to put the numbers together as best as you can, estimate the numbers that you don't have, then try to calculate how much tax you would owe, and then try to make some tax payments, sufficient tax payment along with filing the extension.
All right, very interesting. Okay, what else, now obviously question is, where can one get help with their taxes? Of course, you can get help with SAI CPA services. Before you reach out to anybody else, give SAI CPA services a call, 908-380-6876. You can visit their website, saicpaservices.com. Remember, in person, over the phone, over Zoom, all these meeting options are possible with SAI CPA services, and their experienced, knowledgeable, on-hand CPAs. There are very few firms who will have their trained CPAs on staff, and they are there to help you out, to guide you with taxes, and as well as what kind of corporation you need to set up should you wish to start your own business in 2024. So they are a complete package to help you out with taxes, and also investment advisors in the sense where you can invest to save money on your taxes. Remember that, to save money on your taxes, because you invested somewhere and you can save substantial amount of taxes, and your investment earns dividends, return, interest, whatever it is, and that's why you need to know, and that's what SAI CPA service is all about. I also understand, AJ, you have gotten IRS audit chart, something like that?
Absolutely. So we wanted to show our viewers the IRS audit chart, and the intent over there is IRS does a lot of audits. IRS has 6 years to audit your file after you file the taxes. So it's important for you to do it right. If IRS looks at your file 5 years later, not only they will ask for late payment penalties, the interest, and whatever taxes you owe, the inaccuracy related penalty, which can itself be 20% extra. So it's extremely important to file your taxes. I mean, in general, IRS audit rate is about 0.5%. So one person gets audited out of 200 people. But depending on how much income you have, if you are making more than $1 million, your audit probability could be as much as 3.2%. I mean, these are the numbers from the last year. So this IRS has hired a lot of trained people. IRS has invested a lot of money into hiring the right staff. So the audit rates are expected to go up, especially for high earners, especially for the corporations.
We always talked about that, and we have said multiple times that when you get IRS tax audit, one is that you don't need to get scared. You don't need to be scared. Contact your accountant right away. If you don't have one, contact SAI CPA services. Second is that do not ignore it. Just take some action on it and immediately follow up. Quickly, AJ, we got 1 minute left. My question to you is that if someone gets the IRS tax audit, and if it says so and so amount is due, do they need to pay right away, or do they really can hold on to it? What?
Even though they may have to pay it, but I strongly advise all the viewers not to pay it immediately, because there are a lot of scams going on. First, you want to understand who is sending this notice. Is this a legitimate notice? Is it really coming from IRS? A lot of IRS looking notices are in the market, asking for a couple of $100, and a lot of taxpayers not knowing any better, and just because they don't want to deal with it, they just pay a couple of $100 because the accountant will probably charge them more money. But then they're disclosing their bank information. You want to first ensure that this is a legitimate notice. Make note of this number one more time, 1-800-829-1040. Or go to irs.gov, create your own profile first, or take this notice to the accountant. It's not about a couple of $100. You want to make sure why the notice came, and then you decide how do you pay this notice. Just don't blindly, you got the notice, let's pay it, we don't want to deal with IRS. That may not be the right approach.
All right, so now this part has a lot of details. So what we're going to do is that on the screen you will see IRS red flags chart, and you will see common questions and their answers on the screen. So that way you can review it and you can follow up on it. But once you get the audit, make sure that you take action on it and contact your accountant CPA immediately. With that note, we come to the end of this week's The Tax Talk with Ajay. Yes, and then now we're going to go with the quote of the day.
Absolutely, Sanjeev ji. So today's quote is, if you want to be rich and famous, try being the rich first. If you're not making enough money, it wouldn't matter. In order to make enough money, you have to pay enough taxes. So it goes in a circle. As much as you don't want to pay taxes, if you don't pay taxes, you are not seen as credit worthy. So you want to be rich, start paying taxes.
Has any rich person gotten famous by paying taxes on time?
Well, if you have to choose between being rich and famous, I would advise try being rich first.
Yes.
Famous you can be, and you don't need to be. It's all here.
Well, that's AJ's quote of the day, and then quote of the week also, I can say. With that note, we come to an end of this week's edition of the Tax Talk with AJ, and I'd like to thank him for his time and his advice and the guidance. I am Sanjeev Pandya, wishing you all happy and the tax-free days ahead. Keep smiling. We'll be back same place, same time next week. Until then, so long.
Thank you.